Okay, welcome back, everyone. Had a bad disconnect there. All right, let's get back to our scheduled program. The Let's see here. The article that we left off was by CCN on the derivatives and financialization of um, the crypto exchange market. Uh, One of our favorite co-hosts, Dollar Will, came in, but I lost connection. So okay, but it's a good article. The Excuse me, the Wall Street veteran was just concerned about Wall Street's banking practices, tactics, bringing the whole cryptocurrency market down with fractional reserves, with um, uh, derivatives, bringing these practices to the cryptocurrency market and backing Bitcoin without any physical backing. With that, they could multiply the Bitcoins well beyond this 21 million cap. Is basically what the article is trying to get at there. I know, Noah, you sent this out a couple days ago. Um, did you have any comment on this to help Dollar Will get more understanding of what the article was saying
I
without?
think I
Okay.
kind of get it now. I had to, you get to this is okay. I'm a technical trader. I'm like, okay, what the heck is fractional reserves? Okay, I looked it up. I understand the concept now. It's just the idea that everybody, I think now, you can correct me, Noah, everybody's familiar with the fact that all of the money of the account holders, they are not physically in that bank. They
Correct.
have to have a fraction of those.
Yeah,
Uh,
just
uh,
as greased.
correct, correct. So yeah, I knew the practice. I just wasn't the term. I didn't understand it right off what it was. And so derivatives is as the name implies, is something that derives its value from something else. And so usually that's an option or a futures contract.
Well, actually, just the heart of the article is that Wall Street wants to continue its shenanigans in the crypto sphere. That's if you
Right.
want to keep it in like a sentence, that's basically what he's saying.
Well, what they're called, but if I correct, help me understand what he's calling shenanigans is the practice of and using these highly leveraged investments like options and futures while only having a fraction of the balance on hand in the bank, and how that could
Right.
potentially
Just to name a few
calamity.
of the almost borderline illegal stuff that they do.
Right, but that's
Well,
business
not
as
illegal,
usual.
well, I should say.
That's business as usual.
Right.
So it's like if those are if those are fears that people have, they should have those fears irrespective of cryptocurrency.
Right. Right. It just kind of goes against the heart of cryptocurrencies, which is to get away from Wall Street and what they were doing. Now Wall Street wants to bring all the crypto energy, the people, the transactions into themselves, so that they can continue what they were doing just now in cryptos.
Yeah, well, let's make the announcement. There will be no revolution today. Okay.
Or the revolution will not be televised.
Right. You are not free. Okay. Did we really think that the powers that be
Let it go. Yeah.
would watch their captives, if you don't want to use the word slaves, run free?
Okay. Okay. I have a question. I understand that with these brokers, they don't have to have the whole Bitcoin because Bitcoin can be uh, split up eight times after the notch. But let's say they don't have a whole Bitcoin and they are selling these shares of Bitcoin through with all these customers. Okay, that I get. I understand the bad practices coming into crypto, but the people with that hold actual Bitcoin, we spoke a few weeks ago how you got thousands of people with 90% of the market, whole 90% of Bitcoin. But what about them? What do they have a leverage in this whole game? If since they hold an entire Bitcoin or Bitcoins on their computers or somewhere, they actually hold them.
Yeah, I think that's the silver lining of the story is that most of it is on, quote unquote cold storage, either, written on pieces of paper or on people's computers or, that kind of thing. The majority of cryptocurrencies, or sorry, I should say, the majority of Bitcoin is held in that manner. But the kind of the risk is that, once they start buying up, a significant amount, maybe like 20%, they'll keep it in their banks, and then they'll do things like issue shares of the, and use those use the Bitcoin that they have as kind of like the backing for these crypto shares, and then sell those shares to investors and people. The whole securitization of different, how should I call it? Well, basically, where they try to securitize it, kind of like how Mike was saying earlier with the housing market, right? Really, who owned what when it came to the mortgages? No one really knew, because they would take hundreds of thousands of mortgages, put it together, split it apart into 20 parts or 100 parts, sell off small pieces of it, and back it with a default swap in case someone defaults. And then who holds the swap? Maybe it's AIG, maybe it's JP Morgan, maybe it's the government, but no one really knows. So that's the kind of stuff they want to start doing.
Okay, that I understand, but let me ask this question. Let's throw this out there. Let's say theoretically there's 1,000 Bitcoin only in existence ever, from time immemorial, but 90% of that, so 900 Bitcoin, is owned by the early adopters, the people who actually hold it in their wallets on the computer. But the big institutional investors come in and buy the rest of the 10%, 100 Bitcoin. But it's fractionalized through the whole stock exchange community. So you're looking at 20,000. Let's say 20. It ballooned up to 20,000. But let's say a time comes where they can't meet those demands of people trying to sell those fractions back. So will that 10% crash the price that's still held by the 90%?
Are we saying that no new Bitcoin can be mined in this example?
That's a good point. No, well, no, I'm not saying that.
And I want to throw something else in there in your question. This is where it gets a little confusing with that term derivatives. There's no there. The derivative, it's like you're buying
air.
You can, yeah, pretty much. You can invest in an index and not have any real ownership in the underlying asset. So the index will move however it moves, and you're basically it's like
it's more like a bet than it's really anything.
There you go. It's like a bet. Perfect. It's like, so a lot of people if you a lot of these ETFs in the stock world that are pegged to an index, it's more or less a bet. You don't really own the thing that the index represents. You own a bet, a price point. You own a price point. Okay, so those types of investments, bets, if you will, they don't really require that more coins be mined, because it's a derivative. It derives from Bitcoin, but it's not Bitcoin.
That's a good way of putting it. These people going to buy Bitcoin from the NYSE are going to be purchasing price points.
Correct. If they're buying it, it's you have to read in the ETF description. They will tell you if you're actually buying baskets of individual currencies or gold or whatever the vehicle is, the commodity that ETF is based on, focused on, or if you are just buying, let's say, betting on an index. They tell you in the description.
Okay, now let me ask you this: buying these price points, will that will that could that tank when the time comes? Could that tank the Bitcoin market? Even though there are people that actually hold how physical it can be.
Okay, let me answer it this way. I'm gonna, of course, I'm the technical purist trader. I'm gonna reject the word tank. I will substitute the word affect. So
Okay.
by affecting it, could it tank it? Yes. Could it also spike it higher? Yes. Not could it. Will it cause it to drop faster? Yes. Will it cause it to rise faster? Yes.
And then my question is, well, correct me where I'm wrong, but isn't that what currency trading is anyway? Since no currency is backed by anything, you're pretty much buying it at a price point that fluctuates.
Bingo.
Basically, yeah, currencies.
Wait. Repeat that one more time, please.
Well, I'll defer to somebody who knew what I was saying,
No,
because
answer Sage. Make your statement again. It was right. It was good.
I was saying, damn, what the hell did I say? Well, isn't that what currency trading is anyway? Because currency isn't backed by anything, so you're pretty much buying it at a price point.
Okay.
Yeah.
Right. It's just based on the supply and demand. How much supply of that paper currency there is, and how much of a demand is it for people who want to buy it.
Right. See, it's like that's why I never buy into those the fear aspect of, the dollar is fiat. It's not based on anything. Well, the concept of what you're really doing when you're investing or trading, you're actually chasing value. That's what you're doing. You're chasing value, and value is it's like a consensus opinion of the market. So if you want to call that fiat, I mean, how tangible is the concept of value?
Right.
It's just what people agree something is worth, and money is the same way. Whether that money is the dollar, whether that money is a physical bar of gold, that physical bar of gold does not maintain a static value.
Okay.
Right. Let me guys show you this kind of like debt pyramid that I found. It kind of really illustrates, how the financial world is currently. Well, here at the bottom, at like 2.8 trillion, is the physical paper worth of, the assets, right? And then you have gold and silver, that's just 7 trillion. Government bonds, which are basically debt, is about 15.5. The US has 18 trillion of it. And then as you go up, you see the derivatives, it's 1.5 trillion. 1,500 trillion. What's the number after trillion?
Quadrillion.
Quadrillion. These are basically the bets globally being made on when you combine all of the different, currencies, private debts, basically any kind of betting that they're doing. It's look how much bigger it is compared to how much people actually own of anything, right?
Right. That's right. That's an opinion. That's people putting real money out there to back an opinion. And I'm one of those people.
So when I hear a lot
how much
of
stuff we really own that's of real significant value is this, right?
That's tangible. That's
tangible, I should say. Yeah, is this. And then all of this is just out of thin air, basically.
Right.
wow.
And we're in this system. There's no getting out of it.
So when I hear a lot of people talk about, oh, this is where wealthy people put their money in, it's always something physical in terms of real estate.
Yeah, but real estate doesn't maintain a static value either.
Right, but it's physical. I'm saying the physical part of it.
But does that the fact that it's physical, our idea that it's safe because it's physical, that can be challenged. I say that's a false notion.
No. I'm not saying it's safe. I'm just saying it's physical.
What difference does it make that it's physical?
Or actually, could you explain what you meant? Maybe we didn't understand.
Well, when I hear,
Ooh, I'm liking this conversation right here. Go ahead. Go ahead.
well, when I say, okay, you show the debt pyramid, and I don't disagree with that. I hear a lot of people when they talk about people's not people's millionaires, billionaires, wealth. They park a lot of their money in real estate, income producing assets, real estate or land,
Right.
property. Let's use property as a blanket statement. Property.
Can I challenge that premise?
Go ahead.
The use of the word park. No intelligent investor parks his money anywhere. Because
Okay, I see what you're saying.
change is constant. Change on earth is constant.
Right.
Now, depends on the value that you acquire that asset. Okay. You can look at charts and say, okay, I got this. I bought this real estate today, 2018, at 1990 prices, year 1990 prices.
Mm-hmm.
So you have some protection built in at that bargain price that you acquired the property. So you can look at charts and say, okay, if we burn off 50% of the gain since that time, I still am in the black.
Right. I think this could be a topic at all of its
Yes.
This is why rich, or I should say wealthy people, they have their own private banking, or where they work with a private bank, or they have a wealth management. It basically like a hedge fund just for their own money. Like Bill Gates has this. A lot of the other rich people have it, and this is because, as like an average person, you can put $100,000 in a bank account, right? But after that, the bank doesn't, you're not really, after 100,000, nothing is safe, right? So they have to figure out a way to spread around their wealth, their money, in order to, at the very least, not have a decrease in value. Because if they have it just, let's just say, $10 million just in lira, then if the lira is going down, then they're losing wealth, right? So they have to. That's why a lot of rich people, they buy paintings, because it's usually a good store of value. If you buy the old rich paintings, that's why they buy land. That's why they invest in companies. So they kind of do all of this stuff in order to, at minimum, maintain their wealth.
That's what I was getting at.
And we have stocks and ETF, which represent things like land and these other stores of value, so that are more liquid. You can transfer from one asset to another with a click on a website.
Go ahead and correct me where I'm wrong. And I know, like I know you probably had to move on to the next topic, but what I think your brother was headed was, kind of talking about what exactly is value, irrespective of if it's physical or not physical. Was y'all headed that way? And shit, that's all I got.
Yeah, that's it. That's exactly what is the nature of value. And the point that I'm making is that it's an elusive, fluid thing, but we're not taught that. And so instead, people are taught that real estate always, maintains its value, or gold always maintains its value, as implying that it never goes down, or you will be safe if you buy it. And we've had too many, instances recently to show that that's not true. It's more true than false, but it's not always true. It's not a constant.
Yeah, and what you anti-get.
As a technical trader, I say there's no getting around knowing how to read a price chart. There's none, and especially about understanding the relationship of the U.S. dollar to commodities like gold and oil, and that's how you can get at, is my asset, did I purchase my asset at the beginning of a climb higher, or am I buying my home or tangible asset at the top at a mature point in the cycle? If you don't study it like from a technical standpoint, you have no idea what you're doing.
Now, what you and anti-gravity stated a few minutes ago was exactly what I was trying to get at. The physical things holding a store of value better, not 100%, but better than the derivatives or the betting or the buying price points. That's what I was trying to get.
No, that's not what I'm saying. I'm saying it doesn't matter. That's what I'm saying. I don't know if that's what, I'm not saying that's what Noah's saying.
It depends on your strategy.
Yeah. The derivative, if the derivative is doing its job, it's tracking the value of the commodity.
Right. And it also depends how much, risk you're willing to take by buying a bunch of gold bars and putting it in, I don't know, your house or whatever.
Yeah. So it's like, how practical is that? How practical is that? So when the derivatives work, they're fine. It's like the reason we've had this system, of fiat, is because if you look at it on the whole, I would say it's been working. Now, a lot of times what happens is people are greedy. They buy the wrong thing at the wrong time. And instead of taking the L, they blame the system. Now, that's what's really going on. That's my point. That people want to blame there's something unjust going on, where they just weren't educated enough about what they were doing.
So I'm gonna just throw a Hail Mary question here. So when you're looking the whole price chart thing, as it pertains to determining value, quote unquote, irrespective if it's physical or not physical, looking at the history and the charts, when you're in the process of projecting, that's going to determine if you're going to invest, not invest, hold, whatever. What variables do you kind of look at? Because you're looking at a chart, you're seeing the price going up and down, and then of course you're kind of digging deeper to see, okay, what made it go up, what made it go down? Do you do that, yes or no? And then what do you do to determine your future upside or downside, risk, reward? If that makes sense.
I will put an S on
question to answer.
I will put an S on charts.
Yeah.
Charts. It's not one. And I'm a if you want to say, I'm a macro trader. Macro, I guess macro market, to the extent that I can understand macroeconomics. I'm a self-taught, college dropout. So to my own intelligence, if you will, is my limiting factor. Okay, but I understand that there's a relationship. So I'm looking at a chart long range of the dollar. I'm looking at the chart long range of interest rates. I'm looking at charts of major things like oil. The reason is you can't run a factory without some type of fuel.
Right.
And that relationship between the dollar, you trading the dollar for the fuel. You pay your energy bill every month at home or in your company, and you're trading dollars for fuel. You can't keep the lights on in the factory running without fuel. So the most basic trade especially in the industrial age, is the exchange of your money, your dollar for fuel. And they have an inverse relationship.
Right. I think we have to move on to the next article, but I would say, Supreme, that question completely depends on you.
Appreciate that.
What kind of person, how much money do you have? What kind of strategy do you want to take? You want to take more higher risk, lower risk? That question is kind of impossible to answer because it depends completely on you.
Well, I'll say this. The answer is you got to have a plan, a view, a perspective, and it's not everyone doesn't evaluate the macro economy the same way. You develop your own, strategy. But I think people are more alike than different. But the goal is to have a plan, to have a perspective, to know that it is important to view the world that way. If you don't, then you're just along for the ride. You're just in the herd, and when whatever you've been doing doesn't work anymore, you're going to lose, and you won't know why.
Okay, all right. Good first article. Good intro to the
Gotcha.
Entrepreneur
Thanks.
show. Our next topic, I know it comes from New York Times, entitled "Transaction Costs and Tethers: Why I'm a Crypto Skeptic," written by Paul Krugman on July 31st. On our sister channel, Wealth Power Business, we went over this, but I read the article and I just had to add it on ours because the points he talked about uh head scratching. All right, article. I'm still on vacation, hiking and biking in various parts of Europe. I'm keeping up with the news, more or less, but I'm only occasionally and unpredictably in a place and condition where I can actually write something and post it. But this is one of those times, and I thought I'd post some thoughts in advance or stuff I'll be doing after I get back. Specifically, in a couple of weeks, I'll be going to play Emmanuel Goldstein, the designated enemy, at a conference on blockchain and all that. Hey, if you only speak to friendly audiences, you're not challenging yourself enough. So I thought it might be worth explaining why I'm a cryptocurrency skeptic. It comes down to two things: transaction costs and the absence of tethering. Let me explain. If you look at my broad sweep of monetary history, there has been a clear direction of change over time. Namely, one of reducing the frictions of doing business and the amount of real resources required to deal with those frictions. First, there were gold and silver coins, which were heavy, required lots of security, and consumed a lot of resources to produce. Then came banknotes backed by fractional reserves. These were popular because they were much easier to deal with than bags of coins. They also reduced the need for physical precious metals, which, as Adam Smith said, provided a sort of wagon way through the air, freeing up resources for other uses. Even so, the system still requires substantial amounts of commodity money. But central banking, in which provide in which private banks held their reserves as deposits at the central bank rather than in gold or silver, greatly reduced this need, and the shift to fiat money eliminated it almost completely. Meanwhile, people gradually shifted away from cash transactions, first toward payments by check, then to credit and debit cards and other digital methods. Set against this history, the enthusiasm for cryptocurrencies seems very odd because it goes exactly in the opposite of the long run trend. Instead of near frictionless transactions, we have high costs of doing business because transferring Bitcoin to other cryptocurrency unit requires providing a complete history of past transactions, which is false. Instead of money created by click Instead of money created by the click of a button, we have money that must be mined, created through reserve intensive computations. And these costs aren't incidental, something that can be innovated away. As Bruno Meyer and Adabi point out, the high costs, making it expensive to create a new Bitcoin or transfer an existing one, are essential to the project of creating confidence in a decentralized system. Banknotes worked because people knew something about the banks that issued them, and these banks had an incentive to preserve their reputation. Governments have occasionally abused the privilege of creating fiat money, but for the most part, governments and central banks exercise restraint, again because they care about their reputations. But you're supposed to be sure that a Bitcoin is real without knowing who issued it. You need the digital equivalent of biting a gold coin to be sure it's the real deal. And the cost of producing something that satisfies that test have to be high enough to discourage fraud. In other words, cryptocurrency enthusiasts are effectively celebrating the use of cutting edge technology to set the monetary system back 300 years. Why would you want to do that? The problem does it What problem does it solve? I have yet to see a clear answer to that question. Bear in mind that conventional money generally does its job quite well. Transaction costs are low. The purchasing power of a dollar a year from now is highly predictable, orders of magnitudes more predictable than that of a Bitcoin. Using a bank account means trusting the bank, but by and large, banks justly justify that trust far more than the firms that hold cryptocurrency tokens. So why change to a form of money that works far less well? Indeed, 8 years after Bitcoin was launched, am I still on?
Yeah, we can hear
Okay.
you.
Indeed, 8 years after Bitcoin was launched, cryptocurrencies have made very few inroads into actual commerce. A few firms will accept them as payment, but my sense is that it is more about signaling, look at me, I'm cutting edge, than about real usefulness. Cryptocurrencies have a large market valuation, but they are overwhelmingly being held as a speculative play, not because they are useful as mediums of exchange. Thus, this means that crypto is a pure bubble, which will eventually deflate to nothing. It's worth pointing out that there are other cryptocurrency like assets that don't actually get much use as a money, but which people hold anyway. Gold has been actually money for a very long time, yet it retains its value. And the same can be said to a large extent of cash. While cash transactions are common, they account for only a small and declining fraction of the value of purchases. Yet dollar cash holdings have actually risen as a share of GDP since the 1980s, a growth entirely accounted for by 50 and $100 bills. Now, large denomination notes aren't regularly used for payments. In fact, many stores won't accept them. So, what's all that cash holding about? Well, we all know the answer: tax evasion, illicit activity, etc. And much of and much of that is outside the US, with estimates suggesting that foreigners hold more than half of US currency. Clearly, cryptocurrencies are in effect attempting for some of the same business. Very few people are using Bitcoin to pay their bills, but some people are using it to buy drugs, subvert elections, and so on. And the examples of both gold and large denomination banknotes suggest that this kind of demand could support a lot of asset value. So, does this mean that crypto, even if it isn't the transformative technology its backers claim, may be a bubble? Well, this is where tethering, or more precisely, its absence for cryptocurrencies, comes in. In normal life, people don't worry about where the value of green pieces of paper bearing portraits of dead presidents comes from. We accept dollar notes because other people will accept dollar notes. Yet, the value of a dollar doesn't come entirely from self fulfilling expectations. Ultimately, it's backed by the fact that the US government will accept dollar notes as payments of tax liabilities. Liabilities it's able to enforce because it's a government. If you like, fiat currencies have underlying value because men with guns say they do. And this means that their value isn't a bubble that can collapse if people lose faith. And the value of those $100 bills sitting in drug lords' layers or whatever is in turn tethered to the value of small denominations back in America. To some extent, gold is in a similar situation. Most gold just sits there, possessing value because people believe it possesses value. But gold does have real world uses, both for jewelry and for things like filling teeth, that provide a weak but real tether to the real economy. Cryptocurrencies, by contrast, have no backstop, no tether to reality. Their value depends entirely on self fulfilling expectations, which means that total collapse is a real possibility. If speculators were to have a collective moment of doubt, suddenly fearing that bitcoins are worthless, well, bitcoins will become worthless. Will that happen? I think it's more likely than not, partly because of the gap between the messianic rhetoric of crypto and the much more mundane real possibilities. That is, there might be a potential equilibrium in which Bitcoin, although probably not other cryptocurrencies, remain in use mainly for black market transactions and tax evasion. But that equilibrium, if it exists, will be hard to get to from here. Once the dream of a blockchain future dies, the disappointment will probably collapse. The disappointment will probably collapse the whole thing. So that's why I'm a crypto skeptic. Could I be wrong? Of course. But if you want to argue that I'm wrong, please answer the question: what problem does cryptocurrency solve? Doesn't just don't just try to shut down the skeptics with a mixture of technobabble and liberation dirt. Now, anti-gravity, you sent this a couple of weeks ago, and we talked about it on your show Sunday, Wealth, Power, and Business Chat. And obviously you disagree with it, same as me here. Can you elaborate more on what got on your nerves, what you disagree about it?
Yeah, last week, as I said, on the other channel, he's basically a shell for Wall Street and the current global world order. He said it's doing perfectly fine. Let's just keep doing what we're doing. But if he's being honest, he would know that this is the next step in global finance, right? Originally, it's paper money. Now, eventually, it's going to be, computer, which technically, actually, it already is. I remember I was at the Federal Reserve building, and I asked the guys, basically, how do you guys make the money? And he says, we just put a couple of zeros in a computer, and that's how they create money, right? And then downstairs they have the printer. So it's not like this isn't already happening right now at the moment, right? So really the heart of it is, one, he's overly focused on Bitcoin, right? And there's other aspects of cryptocurrencies that he's not really taking a look at. And third is really fiat currency is not going to go away anytime soon unless something cataclysmic happens, right? It is going to be a slow transition. So maybe there'll be one day a USD coin.
When we talked about that.
I agree and disagree with him at the same. I agree in the respect that people should not just pass off the skeptics. Okay, people should not. I'm not on. I understand that the dollar is fiat, and the difference between me and I'd say crypto cheerleaders is I don't see cryptocurrency as a solution to a problem, and he's right. It's in the end, it's going to be fiat as well. Both are based on the trust and faith that people put in it. It should already, and the same is true for the dollar. I mean, what does the dollar say on it? In God we trust. Okay, they're atheists out here, so why do they feel about their money? Okay, so it's just no getting around it. It's just it's all about trust, and that it's all about value. And it's, for me, I'm interested in crypto only because other people are, and that's enough for me.
Now, in his article, he used age-old criticisms of Bitcoin. Oh, people who sell drugs or dwell in drugs are the ones using this. He uses these same old rhetorics, this spiel of saying, "Oh, cryptocurrency is bad because of this." Oh, warlords use it.
Yeah,
oh,
I disagree with him for that. I disagree with that reasoning, and I also disagree with him saying that when people say gold doesn't lose their value, they need to say gold doesn't go to zero. That's as much as they can go. They can't, gold hit its peak in 2011. It is 2018 right now. We're still having people going around saying that gold doesn't lose value, and it's trending down now. And I maintain that the bottom is not in. So when it's all said and done, we could be in 2019. And gold is still trending down, and we could be in an 8-year trend, and there'll still be people saying crazy things like, well, gold doesn't lose value. Sure, I mean, it's a relative thing. It doesn't go to zero, but you're not. But to say that it doesn't lose value implies that you're safe if you just buy gold.
And anti, I agree with you. You say he's just a shield to old world knowledge. In his article, we can very much tell, the people who know about Bitcoin and blockchain can very much tell that he's dumbing down this cryptocurrency and a blockchain future. When he said that when the dreams of a blockchain future dies, he's dumbing it down to an everyday person which doesn't understand it and saying, "Oh, your thoughts, your fly by night thoughts are correct." It won't, because I'm an economist. I'm writing in this article in the New York Times. Oh, it won't survive. So, but my thing is this: okay, cryptocurrency does have a real world use. I've stated before earlier this week, and I think last week, that blockchain that cryptocurrency sits on top of can be programmable.
I have to separate that. I'm sorry. We got to stop. Not you. I mean, just as citizens, we got to stop lumping in Bitcoin with blockchain. Two different things. And the criticisms of cryptocurrency can't hide behind the strength of blockchain.
Right.
I'm going to tell you, if I had to bet money, I'm going to tell you, cryptocurrency is not going to make it. In the short term, because there is looking as a chartist, after the dollar finishes its run, the dollar is going in a death spiral, and the cryptocurrency is going to be the savior. It's going to offer great relief. Does that mean crypto is going to be around forever after that? No, I'm telling you, after the dollar finishes its death spiral, crypto will begin its death spiral.
You got some noise in the background. Noise in the background.
Oh, Prim, could you mute?
You got noise in the background.
Yeah, so I can see a near-term utility for crypto. I don't see necessarily a long-term.
Right, but he didn't give that kind of nuance. He lumped Bitcoin in with blockchain.
But blockchain, I believe blockchain is forever. I believe that.
Well, you don't have cryptocurrencies without blockchain, so that's why it's lumped in with it. Cryptocurrency without blockchain is just a digital currency.
Yeah, but what I'm saying, we can have blockchain without crypto.
True. Yes, you got a point.
That's what we're going to have in the long term.
But blockchain is the infrastructure behind the currency itself. So what I'm saying is, cryptocurrencies need a infrastructure to ride upon, and so they lump it in with blockchain because that's its wedding partner.
Well, I hear you, but I think that we need to, when people are critical of cryptocurrency, we need to weed out, have them make an argument, challenge them to make an argument that's blockchain free. We're not criticized. It's possible. There's a lot of people out here like me who are not critical of blockchain, not suspicious of blockchain. We're suspicious of the long-term utility of crypto.
So you're saying it's the same way as criticizing the dollar, but not talking about the Swiss system?
Yes.
Okay.
But
let's move on to the next article.
In terms of utility, that's where the utility comes in, is improvements or even replacement of the SWIFT system is where blockchain comes in.
All right. Our next article comes from Target Marketing Magazine, titled "Madmen and Madmen, Madmen and Madmen: How AI is Changing the Marketers of Tomorrow," written by Chaitanya. All right. Article: The world of marketers is changing quickly. Emotionally driven advertising projects from friction. No, goodness. I apologize. Do this. All right. Got it. The world of marketers is changing quickly. Emotionally driven advertising projects from fictional madmen like Don Draper have given way to more data reliant mapmen, able to navigate a strategy using data and analytics, like Amazon founder and CEO Jeff Bezos. Now, a new factor is changing the game: artificial intelligence. As AI integrates into marketing functions from automated CRMs to campaign analytics Goodness. The first question most people ask is, who will AI replace? In truth, it won't replace anyone. Just as sophisticated calculators didn't make just as sophisticated calculators didn't make accountants obsolete. AI won't replace marketers. Rather, it will help them evolve. If Madman and Mapman exemplify the pinnacles of marketing over the past half century, then the AI era heralds a unique merger of the two. The CMO and increasingly Chief Marketing Tech Officer or CMTO of tomorrow is not reliant on either institution or data, but rather a powerful integration of both to achieve an even higher level of success. Marketing has a history of resourcefulness, and adding AI to the mix is no exception to this assessment. For instance, in the 1950s and 1960s, a set of distinct circumstances drove a Draper-esque creative marketing style. Factors including the rise of American consumerism and expendable incomes, the doubt of credit cards, car and TV ownership, the debut of credit cards and TV ownership, and a sense of patriotism attached to being a customer. This is this is creative marketing environment. A Don Draper type was an easy sell. A creative, bold man of ideas to induce people to buy more stuff. So too was his creative marketing approach. Jump to Bezos and his behemoth company. Very little is different about his resourcefulness, just circumstances. The rise of big data, the collection of data from every device, including mobile phones, cars, etc., not to mention online browsing habits, led to a personalization movement in marketing, which Bezos was keenly aware of when building Amazon into the household name it is now. I'm pretty sure I read this before. It was a short article, but Preem, you asked, you sent this out, and I put it on the docket. And when I read it, I felt it had something to do with economics. Um, it's saying that, pretty sure, man, I thought there was a larger article when I read it before. It's saying that AI has potential to help marketing grow, and not necessarily. I know it has some classes with technology, but not necessarily replace these marketing
I'm
teams.
not. I'm,
Hello.
You're muted. Free.
Preem's microphone is kind of janky. He should probably log off and log back on.
down there may be like a 1, 2, 3, 4 down there to continue to the next page, and even an all option. Because I'm looking at my notes. Pardon me, I'm in the car right now. I'm not behind my thing, but yeah, it definitely goes on. Yeah. There it goes.
Okay. Yeah. Okay. Where we at?
Do you have an opinion on his?
Yeah.
Oh yeah.
Go
You
ahead.
wanna? Yeah. Go and jump into it.
I mean, on that first part that you went ahead and read. Yeah, yeah, definitely has to do with economics on the mom and pop level, on the average everyday person level. Who's out here, making coin, in this market, who's engaged in the marketplace, and that their marketing or the marketing strategy nowadays, it definitely, once upon a time, you can definitely go to direct response. You can go to regular display advertising, but there needs, and then you got to the point of using data and data points, if you're a small, medium-sized business. But the next evolution is to go to the use of AI, which this guy didn't make a good argument of it. In my opinion, I don't think he really made a good, significant enough argument of it. I see it as one and the same. In what Bezos is doing with data and in what he's propositioning with AI, it's all the same thing. It's still programming. It still takes me back to my Commodore 64 and Commodore 128 programming days of if-then statements. It's still just using, data points. But that gets to the other, pages when he gets into more in depth as far as what his position is on AI. But yeah, so far he's on point. You have these two silos or these two ideologies. One is the creative, the madman, the emotional, the advertising, and then one is the Bezos using the data to kind of personalize, but taking the humanization out of it. It's taking the data, it's coalescing it, and it's shooting you out or feeding you things that you may or might be interested in. So it's like how his whole theory is AI is going to take these two necessary worlds and merge them into one beautiful thing. And that's not that's not accurate in my opinion in the way that he presented it in the following pages.
Well, he's right, and you will be right in your assessment as well that basically data mining and data science is the new gold rush. People and data what's creating the new economy within itself. So you can target advertising, so you can target as well as the government wants some of this data as well, for their own personal reasons, for homeland security. So there's a lot of data points that are being generated from your phone as well as your desktop computer to create this new data map of who's who and what's what, and many advertising companies are paying big dollars for it. We see Facebook is generating revenue quarter after quarter, selling off data to advertisers, but they've done it in malicious ways as well. So there's going to be new caps on how this data gets moved around on the market, and the new economy that they're trying to create out of it has to be regulated. We see the European Union enforce GDPR, which is general data protection regulation that doesn't allow companies like Facebook to siphon off data and misuse it without the user actually knowing. And I think Congress is actually implementing something right now, although they're out for August. When they resume back in September, it's gonna go back on the docket as to new privacy regulation of data mining and data correlation of users' data, because it falls under PII, which is personally identifiable information.
And what you see happen with that one article that we cited last week at the Keynes at the Keynes thing with Unilever, and there's another thing that I'm going to submit in a couple of weeks for the young lady. It's a short little video clip, but it's like now the tide has turned, and these big companies are all of a sudden pushing back, and they're demanding their return. They're saying, "Hey, I need to be able to monetize it. Yeah, you can tell me how many steps someone took. Yeah, you can tell me what stores they look at. Yeah, you can tell me where to step in and step out. You can give me all stuff, but just give me a way to go and monetize it." And this is coming from the folks who are playing with monopoly money. They're publicly traded companies, so they got to just throw around and just experiment and look good and have great ads winning. Because at a certain point in time, if you want to, that was significant. Think about the Super Bowl. Many of those companies, most of those ads that they pay millions and millions and millions of dollars for, they don't pay that money for effectiveness or to drive revenue. They pay that money for notoriety. They pay that money for popularity, for it to go viral. Whether or not it sells a car or sells beer or sells whatever, they don't care. But that dog don't hunt no more. So they're finally coming around to asking for what the average small mom and pop, owner asks for is, hey, we need ROI. So can we monetize all these data points? Because that hasn't been um, that hasn't been the overwhelming case up to now, and it won't be. Because I mean, listen, just because my phone is looking at a certain pair of jeans, you don't know why I'm looking at those jeans. You don't know it's because somebody told me something, I'm looking for it for somebody else, I'm looking for it because it's for a charity. You don't know if that's my personal interest or if I'm doing it because of something completely unrelated to me, and I could give a darn about those jeans or those shoes after the fact. But you're still going to haunt me throughout the internet, on Facebook, everywhere else, because I went to this page. It's good, it works, it's helpful, but it's overhyped. It really is significantly overhyped. And if you get enough money, you can use it as a numbers game. If you're a multi-$100 million company and whatever, yeah, you can throw enough money at the board and get a decent return. But if you are the small business owner, again, I mean, we worked out, what, less than 50 employees, up to 7 million, 10 million, whatever it is in annual revenue, whatever that number is. Um, you can't play that game the way that these publicly traded companies are, and you have to be more, you have to hold these companies more accountable with that data.
Anybody else want to chime in on this?
Yeah, I just wanted to add to what Preem's saying, but the price to stalk to stalk the consumer is so low. I don't see that practice going anywhere. But I hear you saying that dog won't hunt, huh? You got to come up with the real meat to show that that lurking customer is actually becomes a buying customer.
Well, that's where artificial intelligence comes in, and I think that's kind of where the article was going. Although I didn't read the whole article, based on the idea of using artificial intelligence, you're talking about making human decisions. So through programming, so it's not so much as that you saw one pair of jeans and now all of a sudden they're just pitching a whole bunch of jeans at you. They're actually collecting that data based on your zip code, based on your IP, based on your where you were standing at the time that you actually looked at it to actually determine what kind of market is going to be available where that last data point was.
Yeah, so in short, in the last paragraph that's titled "How AI and Machine Learning Are Changing the Market," I'm not going to read the whole thing, but I underline his main points is AI machine era will be in figuring out how the machine to digest it into actionable information. That doesn't sound right. Let me jump to the next one. Machine learning can sift through massive amounts of data, but the technology on its own is incomplete. Machines don't have the ability to read emotions or judge narrative quality. Duh. Without that ability, it hinders marketers' visibility into the customer journey and prevents them from understanding how customers travel to digital points. What does the future hold for AI marketers? Again, if you read it, it pretty much is a dud. He's not saying anything significant. It's taking this data and aggregating it and spitting out a suggestion or recommendation without even interacting, with, the person. Again, if you got a large enough pool and you got a lot, enough coin, yeah, you can definitely make that role and play it, because then it becomes a numbers game. But it's no different than what Bezos and has been doing with his data and his personalization for over two decades. I still have yet to see what how AI is different from data from these last 2 decades of data science, data analytics, and data whatever, yada yada yo. It doesn't. I really don't see the difference in it. There isn't any. There isn't any.
Actually, what artificial intelligence does is it actually drives decisions that you would typically make as a human being on its own. If you look up something called Google Duplex, which is based off of TensorFlow, you'll get a better understanding as to how AI actually works, because Google actually mastered it for the most part. IBM has something called Watson, and it's called. They also have another platform called Watson Health that actually makes that's actually an artificial intelligence platform that makes these decisions in healthcare to better assess medicinal needs as well as surgical needs for doctors. So there is a growing demand for artificial intelligence in these areas, and to say that you don't see the difference is because you may not be paying attention too much or may not have enough knowledge on it.
True that. True that. I've got very, very little knowledge and understanding on neural networks, AI, yada yada yo. This much I do know to be a fact, or have heard to be a fact, is that the human brain is far more capable of far more many computations than any computer that can ever be built. And I'm not saying in factoring like equations and numbers and this, that, or whatever. Like, I'm sitting in my car right now. So if you were to put an AI here to make a decision for me right now, it couldn't keep up with me as to why I'm going to do the next motion or the next thing that I'm going to do. And in a split second, what could go ahead and determine that? It couldn't figure out the thoughts that would come in my head that would determine, am I going to go here or go here? Is she going to come up in my head? Is this going to come up in my head? It couldn't factor or take all those things into play. It has to be done. AI has to be done in a very controlled environment, you know, and I don't know where I heard it. It was on with you guys a couple of days ago, but I don't know what it had to do with. But the thing with AI is you constantly have to keep spitting into it more programming, more. You got to keep feeding the doggone thing so that it can keep up.
Right, but the thing is, that's for now, right?
Okay.
But once they start making improvements on what they call, general intelligence, is basically what we as humans have, compared to the specific intelligence that the AI programs that already exist have. Not AI, like computer learning programs, in terms of doing computations.
So then would that require then humans to stagnate? Because if humans continually to evolve, then AI can never catch up.
No, AI would surpass us. That's
no, it's going to surpass you, because the portion of AI is about deep learning, machine learning. So it has to. So in order to have this deep learning, you have to constantly feed it data, which is why they collect data. So if they can keep feeding data into it, and you have this new society of connected devices with IoT, your tablet, your smartwatch, and your smartphone, and your smart TV, all of these data aggregates constantly feeding data. That's what's going to allow AI to say, I know what you're going to do next, because you left at 7 o'clock in the morning to go catch that bus to get to your next destination. It already knows what you're going to do, so it's going to predetermine your routes.
Which is what I just read earlier, and I know you got to move on, but to go and reiterate what I read just earlier, that this guy quoted, who's pushing AI, machine learning can sift through massive amounts of data, but the technology on its own is incomplete. Machines do not, and I know you guys said not yet, but machines do not have the ability to read emotions or judge narrative quality.
Right.
Give me that, and I'll lend an ear. But
no, you're correct, Kareem. But that's why we have what is called general intelligence, where we're able to figure out those kind of things based on the information that we get, and then so in the future there'll be programs that write themselves, right?
Yeah.
It needs I don't know, facial recognition. Or emotion recognition, and so then it'll create that program, or it'll download it from the internet, or something to that effect, right? But in terms of raw data, computers can absorb unimaginable amounts of information, stuff that we could never, right? So the only thing now is if they're able to analyze it in the way that we can, which that's where AI comes from, that human element of it, if they're able to replicate that.
And another thing, it seems that where the computer would have an advantage is you could apply a program to like a whole industry. You would have workers across a whole industry sector inputting data. You know, let's can imagine like Google comes out with something, and you know, it's so, you know, the price is at a point where you can't afford not to use it. So you're going to voluntarily submit data into it. Where it's like when you're your own company, you're creating, you have data about how your company works. This AI, you're going to have people across many companies putting their data in the same database. No one person could be that smart to be able to get the kind of result that is going to be the output of artificial intelligence. That's where the people putting the input is from, like across a whole industry. Another benefit I see is if you're like a Fortune 500 company, that marketing manager isn't going anywhere versus a small business where you're a one-man band. You're doing it all. AI is going to help that one-man band person. They're going to have a better quality of information about what their company is doing and how to allocate their marketing budget. That's it.
All right. Our next two items on the docket run together. This first one came out first from August 2nd. The title is a video from CNBC.com. Title: Tesla short sellers feel the burn as shares jump. In the video, they were saying that how short sellers of Tesla, oh, if you don't know what short seller is, will, after I introduce these two videos, we'll go over that. Tesla stock was low. So people sold off to, was high. People sold off to purchase at a lower price point, but Tesla stock didn't fall. It shot up. So Tesla's short sellers feel the burn as shares jump. And the next article comes from, I think, again, CNBC. Yes, CNBC.com's YouTube video titled Tesla jumps on Elon Musk tweet to go private. In the video, which came out August 7th, Elon Musk tweeted from his Twitter that he's thinking about taking Tesla private at $420 a share. So with these two articles, there's the basically the meat and potatoes of these two articles. We're going to talk about first, well, both short Tesla short sellers feeling the burn as their shares jump, and Elon Musk talking about, want to emphasize that, taking Tesla private at $420 per share. Anybody want to start it off?
I am trying to catch up to that article about the short people shorting Tesla. That was from the 2nd of August, right?
Yes.
Can you pull up a chart for what happened since then? Because while you're doing that, I want to
just the 2nd of August. People have been short selling Tesla for a while now, and it really kind of irks what's his name, Elon.
All right, on August 2nd on the Google chart.
Well,
can you see?
I want to see like give me like a month. Put up a 30-day view or something.
Yeah, this is a month.
Okay.
And what day did he make the tweet? Was it the 2nd or was it the 3rd?
No, I think this was the 7th. They talked about it on the 7th. They didn't specifically say when he made the tweet.
Here, let
me what happened? What I want to explain when you bring up the charts, what happens with when you short a stock. Let me see how I can make this. This is kind of complicated. When you want to open a short position, you're saying to your broker, of course I want to bet against Tesla, but they have to. Your broker is going to sell some shares of Tesla on your behalf. And you're saying to the broker, I'll give you those shares back in the future.
Oh, the tweet was from August 7th.
August 7th. Okay. The reason why I'm making that point is that a short position begins with buying the shares. It's odd. So it's called short interest or short ratio. That's sometimes the price of a stock can go up, and that's not optimism, that's pessimism. That's a lot of people came forward to short the stock. It could be so many people shorting the stock, initiating a short position, that great number of shares sold to create that short position caused the price to go up.
Oh, that's why I said the point that they were trying to make. It's that, yeah, sure, that's possible, but in terms of this, it was very specifically because he said he was going to take a private. That jumped the stock, not necessarily the short positions. That's why the short sellers got burned.
The article about the short sellers being burned came out August 2nd. His tweet about him thinking about taking Tesla private came out August 7th.
Well, they got burned twice.
Okay.
One, because the stocks was going up anyway during that time, and then again when he launched the tweet, it spiked up, as you know, if you can see from that map. You know, the little from that.
Yeah. So the short sellers must have shorted around this time. Then it went up, from 384 to 349.54, which the CNBC video came out. Then when he wanted to take them private, it shot up again to 379.57, which that tweet came out August 7th.
Right. So what I'm guessing from this is that Elon Musk, he's going to get fined by the SEC because he's
not supposed to do that.
Yeah, he's kind of pretending he's Donald Trump. You can be a politician and go out and lie, but if you're the head of a company and you have fiduciary responsibility to your shareholders, and you just go out there and lie by saying you have quote unquote funding secure, which, you know, from all the reports that they're doing, you know, unless, you know, Saudi Arabia is bankrolling his $70 billion valuation, he doesn't have it. That's my best guess.
Okay, yeah, I'm looking on a chart, a candlestick chart of maybe I could share it. Next week we'll know the deal with this. I'm trying to set up a screen share real quick just to show you guys something real quick. As I'm trying to do this quickly for my laptop battery dies. Okay. Can you guys see this?
Yes.
This is a gap. So this is a little candlestick here was August 1st. This big jump here, that's on the 2nd. So we're coming down now. So of course the trend is you have higher highs. So on the peaks you see higher highs, and then on the lows you see higher lows. That's all good. We'll see if it fills this gap, if the price keeps coming down. If the price continues to drop and say takes out this low, then they're going to rewrite that story, and they're going to tell you in retrospect that this was likely short positions. They caused the price to jump. We're not going to know right now. So this is something to watch, something, you know, definitely to keep an eye on. And we see down here in the volume is going lower. That's not a good sign. This is called a divergence, where the volume is going lower, but the price is going higher. That's not good. So we'll see. Next week we might have we should have a lot more information as this trend continues.
I think I read a report that the SEC has already opened a probe into this.
And that's not going to be good news. If you don't know, you don't want to hear companies under SEC investigation. That's enough to make people sell the shares just on that alone. And that's one of the reasons why I generally do not buy individual stocks. I buy industry-based ETFs because I want to be shielded from news that might affect people's opinion on when you buy one individual company. The CEO better not die, the CFO better not steal no money, and there better not be no class action lawsuit. That's a whole lot of risk, you know, that your money is tied up in. Whereas I prefer to buy baskets of an entire industry, because I look at the macro economics, and I'm just buying an industry because the macroeconomics favor that industry. And so if one company has, you know, any kind of issue, then that's not likely to affect the entire industry. But anyway, thank you. I'm gonna end my screen share.
Now let's get to our last topic of the night. Um, it's another YouTube video. This is from RT YouTube channel, Max Kaiser. Max Kaiser report, emerging and declining superpowers. In this article, he talks is all about China and how China is loading countries with debt. And in it, they talk about how that is somewhat of a America used to, instead of America, how America used to do to go in countries, they used to, but they're saying bomb them, then take their resources. But what China is doing is they're giving them money, so much money that they're burdening them with debt, and in turn, they are actually, for them, their country to pay that debt off that they can't pay off, they are taking land. The Pacific countries they're targeting are countries that are in the Belt and Road, their Belt and Road initiatives way, and two, countries that the United States may not have went into or have done trade with. So what China is doing is, um, I'll give you an example. Montenegro. Montenegro is a small country in Eastern Europeanish zone. Very small country, less than 1 million inhabitants. But China's building an expressway, a road there, and excuse me, the idea was the Montenegro government was going to pay off this road with the trade that was going to be going through there. But what's happening is Montenegro is defaulting on the loan. So what China is doing is they're saying, okay, it's okay, just give us the land in which this road is built on, or give us free trade in terms of not taxing us. Same thing is going on in Sri Lanka. But to make this an economics issue, this is what he's doing. This is what he's saying. What's going on now is America's trying to pass a build act in which they're trying to duplicate what China's doing to these countries for them not to lose their footing economically with countries they've taken over, or other things. And I don't know if you all saw the video or not, but that's the gist of what's going on. What he mentioned in the video.
Yeah, it's a pretty excellent video. I definitely agree with him. I'm also a bull on Africa. You know, I see a very 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 bright future as long as the right prerequisites are there and the people and the leadership handle it correctly. There's a lot of money to be made.
Yes, I agree. I agree. I know we spoke about another video with China and Censor. It's more of a satire-ish channel. But other channels, and not just that channel, other channels have been pointing out how China has been saddling these countries with this surmounting debt. In the beginning, they offer them this money, and they say, "Yeah, sound good, sound good. No, you're not America, so we'll go at your plan." But all in all, they can't pay back; they're defaulting. So this is China is doing it in a soft, controlling way instead of brute force.
Right, and the only difference is that the United States uses military force, where China doesn't have to do all that.
Right.
So it's not so much that China is bad for doing it. It's whoever signs the document, whoever puts their John Hancock down on that paper is the culprit. But the problem with when people want to make this comparison between the United States and China, and even you want to throw the Russia in with the Soviet Union, is that the United States is an artificial country for all intents and purposes. It was, it used the stolen labor of African people to build its wealth, and then it forces everybody else to comply with its ideas, and it doesn't really benefit anybody. Whereas China hasn't really done that, and neither has Russia, right? I mean, China and Russia, predate the United States by thousands of years, whereas the United States is still a very young country for all of its for all its efforts. It's still a very young country, but it forces people by the barrel of the gun, and those sort of politics don't really work with other non-Western states that whose ideology does not align with capitalism for the long term. The reason why China is can so easily coerce African states to participate is because their political structures are one and the same. Their political and cultural structures are one and the same. Same thing with Russia. I just saw that Putin is going to have is developing a new Russo Africana framework, sort of like sort of like NATO, from what I just read. So what it sounds, and Russia aligns well. Russia's values aligns well with African values. So Africans don't have any problem joining Russians. But the problem is, white Americans' view of the world is a very closed-minded view, and it doesn't work, and it doesn't really benefit anybody. You may develop a middle class, but that's not what these people ask for.
Mm.
Right. And okay, never mind. I lost my train of thought. Mike throwing out facts over there.
Any other comments?
I had one, but if I remember it, I'll chime in.
I do have one article that I'm going to put in the group chat.
Roger that.
Oh, okay. I remember it now. I think that when people kind of talk about, China is going to be just as bad as the United States, blah, blah, blah. I think a lot of African countries know that there's not going to be a savior, someone who's going to be benevolent, just going to build up their roads and then, not ask for anything in exchange. There's really, I guess, no honest actors in a sense, right? Everyone has their agenda. So it's about being able to align the different, agendas and use this infrastructure to your own benefit. And China's focus on soft power is, a lot better than, the European countries coming in with, their shotguns and forcing people to, go into their framework versus the way that China is doing it. So is China going to want something in exchange? Of course. So it just depends on who you're willing to work with.
All right. Do you have you posted the link, Mike? Because in the video, they were saying how China is introducing products that's specifically made for the African market, such as cell phones, specific type of cell phones, where they get 8 days of power, because the different regions of Africa where people don't have constant power, and the lack of a strong electrical infrastructure in Africa, and with that, the cameras on these phones are specifically made for African people when they want to take selfies and so forth. Also, some China built customer service centers in Ethiopia to help with jobs being created and so forth and so forth. So it was just some things the article pointed out that what China is doing in its soft power approach to solidify their footing in Africa.
Right, and that's something that the Europeans and the colonialists have never done. You know, they've never really, even when they did put infrastructure in, when they left, they destroyed the infrastructure as they left, as they exfilled out. That leaves a sour taste in the mouth of many Africans all over the continent because the very necessities that they needed during decolonialization, you took that away from them. They're not going to forget that. And now you have like Macron, who's president of France, um, flying to Beijing to have a discussion with Xi Jinping, who's the president of China, um, to discuss maintaining or sharing portions of Africa to maintain European capitalism inside Africa, because at some point Chinese encroachment through economic strategies is going to marginalize and even push out the Europeans, including the main party would be France. So France knows that their days are numbered at this point because they're so reliant on Africa, but they haven't done anything to develop it in terms of the Sahels, where their francophone countries are.
Mm.
They
Right.
did this, they did this to themselves. Even the Canadians are starting to participate now, trying to take over Haiti and as well as some of the francophone countries inside Africa because the hatred for French capitalism is so ingrained at this point that you would need a more softer approach coming from the Canadians, and now you see the Canadians having problems inside Saudi Arabia. It could be a no-fly zone for Canada beyond the Mediterranean as well as the Indian Ocean at this point. So, white colonialism is on its way out the door. Give it about 10 to 15 years, and it will be over and done with.
Right. I think people kind of underestimate, how long African people remember, some of the stuff that's going on. Like if you like where I live, we have a lot of Liberians, and I was asking them about the Liberian Civil War, and they still remember that the United States, didn't intervene to, kind of mediate the Civil War, and that they actually went and protected their, I think it's called the Voice of America, their kind of broadcasting station, where they sent in troops, but only to guard that particular building, and they still remember that to this day. So, in terms of memory, yeah, the people are very angry at the French in particular. So that's why I don't know if I can find the article, but francophone countries are moving away from French as a official language to English because they're saying the French language is dying, and we need to have English so we can kind of integrate more with the global business environment.
Right, and your bank infrastructure is written in English and not in French, so it doesn't really make a whole lot of sense. Even the United States put sanctions on one of the French banks, and forced them to cough up $8 billion or something to that effect, not too long ago. So I think this is like since Trump got into office. So um, they're starting to push out. Once the language gets pushed out and people start speaking English as a norm, it's game over for France.
Mm-hmm. Mm-hmm. All right. Let's get to our last article for the day. This one comes from cryptobriefing.com, titled Crypto Correlation Increases in Bear Market, written by Patty Baker on August 9th. The fate of coins is currently tied to shifts in the BTC market. Article. Unlike conventional stocks, shares, and other financial products, an all coin portfolio cannot completely diversify risk because prices are closely correlated. Cryptocurrencies are essentially influenced by the same factors. This crypto correlation has increased greatly. Data collected by CIRF shows the 14 coins in its index, including Ethereum, XRP, and Litecoin, have all moved more in tandem with Bitcoin over the past year. The increase was greater in the 6 month period between August 2017 and February 2018. The BTC Ethereum price correlation increased by 25%, XRP by 82%, and LTC by 20%. The mean average increase was 32.6%, including Bitcoin Cash, which didn't trade for the full year. Examine. Although the market experienced its largest increase from August until December, there were significant correlations in the first 2 months, with the market's total value plunging from over 800 billion to 290 billion by early February. The correlation is higher during market slides and lower when the market improves. The correlation between Bitcoin and other cryptocurrencies subsided throughout July and early August when the BTC price went from around 6,500 to a peak of nearly 8,400. There was a noticeable uptick in correlation following the SEC's postponement, as the graph shows below. The BTC effect. High profile, accessible, and relatively low volatility makes BTC an attractive option for investors looking to minimize risk but keep value in cryptocurrency. That Bitcoin's position normally strengthens during bear markets often leads to an increase in coin correlation. This week shows just how much coins move in tandem with Bitcoin. The SEC's decision this week to postpone its ruling on BTC ETFs sent shockwaves to the market, 36 billion being wiped in less than 24 hours. Bitcoin is at its epicenter. It's in a unique position as well as being the first cryptocurrency and the most accessible. It is also the largest. BTC dominance, the percentage of the market's capitalization accounted for by Bitcoin, is at an all-year high. Cryptocurrency, excuse me, BTC's influence in the cryptocurrency market is strong, and news affecting Bitcoin's price impacts the prices of other coins. Crypto correlation. This may not last for much longer. Although all coins are negatively affected by the ETF delay, some were affected far more than others. Of the top 10 biggest coins, EOS, Stellar Lumens, and XRP all experienced price drops at equal or above 20%. Ether, on the other hand, fell by only 13%. This could indicate a change in perception. If Ether's price decrease is shallower than other leading coins, then it indicates investors are staying put with Ethereum. There is no all-encompassing answer, but it might mean Ether's price is less dependent on that of Bitcoin than other cryptocurrencies at earlier stages of development. A coin's price remains the most popular factor in gauging a project's real value and long-term viability, despite the pleas of founders and developers to heed the underlying fundamentals of the business and technology. Their value presents remain their value presently remains at the behest of speculation in many cases, and crypto correlation rests on the moves of the market leader, Bitcoin. Volatility will inevitably decrease as cryptocurrencies begin to be valued on utility, then on changes in the wind and scurrilous rumors. And as projects move to mainstream implementation, BTC dominance, BTC dominated crypto correlation will become a thing of the past. At that point, all coins may finally be able to separate their value from the price of Bitcoin. A few weeks ago, I mentioned this before how the other coins in the crypto market are tied with the BTC price because with I want to say 90%, well, almost 99% of the coins in the crypto market, you have the trading pair is Bitcoin, which means you have to have Bitcoin in order to buy a coin that you really want. There's no other way around it unless it has an Ethereum trading pair, a Litecoin trading pair, and maybe one of the two trading pairs. But the main trading pair is Bitcoin, which means when the price of Bitcoin goes down, that coin is going to go down. May not be percentage per percentage, but it will go down. And vice versa. When you sell that coin, you automatically sell into Bitcoin. So the prices is very closely correlated.
Which is why there's such an urgency to have brokerages get away from that and create better, better vehicles to acquire other coins without actually being tied in with this behemoth of a crypto, which is Bitcoin. I was hoping that Dollar Will would see that little chart that they had up there.
Oh, let me.
Oh yeah, I stepped away. I kind of saw that in the open mic or whenever you guys won. I had already looked ahead of have a chart of Bitcoin. I wanted to bring everybody's attention to. But what in particular about that the chart that they put up, Mike, that you want to call my attention to?
Let me share the screen again.
Because they were talking about the decline in Bitcoin from the recent peak.
Yeah. Okay. There
Oh,
was
this
a
is relative to XRP and
yeah. Go ahead,
Litecoin.
Mike.
No, I was just saying that that's what it was that was relevant, but to other currencies.
Right. Remember, we talked on previous shows. That's why I was saying that it's good that cryptos will be treated like other currencies when they can all come under like one brokerage firm, because then right, that tight correlation is what scared me away earlier. Let's say a year ago, when I was looking at it, I was like, well, if I want to get out of a particular currency, again, I'm a technical trader, so I'm not going to be hodling. Okay, I'm going to take a position for a technical reason, and I'm going to leave or sell it for a technical reason. And it helps to be able to have a crypto coin that's negatively correlated with let's say Bitcoin, meaning sort of like a seesaw relationship. When Bitcoin is up, this one is down, so I can have some place to run. And when cryptocurrencies were off on their own island, there was no place to run, and they all seem to be pretty closely correlated. So your only move was to either be in crypto or out of crypto.
I think we did that in one of the articles a few weeks back in regards to, I think it was JP Morgan who did the kind of the crypto that was tethered to the US dollar.
Yeah. We went over that one. Yeah.
So once things like that start coming up, people can then switch, park their money in kind of that brokerage, fiat area after they, did whatever they were going to do in the crypto market. So then that's when people like Dollar will come in, right?
Right. Exactly. That's what we're going to need. We're going to need that. And I think that's going to happen. It naturally, once you bring cryptocurrencies into the space with other currencies like the euro and the dollar and the Swiss franc, then you have to look at the relative merit of being in crypto just like you would being in any other. You're looking again for value. You're looking for the you want to be on the correct side of the trend. If technically we're talking technically, it looks like it's going to appreciate, maybe a good bit. Let's say on a weekly or monthly chart, that could translate to a year or two, of price appreciation. Then you can hide out there. And I think so bringing cryptocurrencies under the tent with all other currencies, that allows cryptocurrencies to be rewarded and punished by the market just like any other currency.
Any other comments?
Nope. Well, if you want, I would like to show a chart. This is not going to be long. Just very quickly to show what Bitcoin price has done. This is going to be the shortest chart reading for me ever. Let's see. I'm trying to.
I don't like to put a bet on that.
Oh no, it's gonna be real short. You're gonna be like, huh? That's it? Yeah, that's it. Okay. All right. This is the peak way up here, and we're looking at a weekly chart, and the low. I can zoom this in. It's just little. It's 58. It's 5803 or something like that. Yeah, that's right here. I believe it's June, the week of June 25th. Our information box says, let me see. The low is 5803. I have a trading buddy that I have to harass because he was telling me Bitcoin was going to the moon. I said, don't bet the farm on it. And look at what happened. It's right back approaching this low. So in the next week, let's see, the low here is 660.19. So we're talking about maybe like 200, like $200 or 200 points or however whatever this is, from making a new low. And once that happens, hell, okay, hell, okay. Now here's what I'm looking at longer term, technically, about Bitcoin. Let's see, I'm trying to zoom in to show some. Okay, all right, let's go back here. Okay, you had a high here, it swung down here, it went high again, went low. This low right here at 29.66. We could very easily get there if Bitcoin goes makes a new low below the June 25th low. So keep your eyes on this next week, and then I'm not saying that's the end, because I believe what we're going to do in this next leg, let's say this leg that started here, we're going to make an ABC pattern. Meaning we're going to have a down leg, a mini retreat up, and then a final leg down. Now, whether that puts us here at 29.66. So basically, once we get the first leg in, which is the first down move, and start retreating higher, we'll be able to make a projection on where the bottom is. I do not believe this next leg down is going to be the bottom. I think we're going to do an AB, and we got to have our stochastic chart down here that's showing a downward pressure. This black line, of course, when it crosses above that orange line, that's strength. We're a long way from strength. The fast line is still going south, so there's no reason to be hodling right now. So I think what we're going to see is A move down, B move up, and then a continuation down. So the first leg could get us here, and I believe that this candlestick here, with a low of 19.19, it would really surprise me if we went lower than this candlestick here. So that's all I got. That's what we're looking at for Bitcoin. Scary ahead to be this close to a new low, but I, of course, am not surprised, because I told everyone long ago that we could, get to. I think the worst public call I made was like 2,500 or 2,000. I think I did say 2,000 at one point. So that's kind of it's still early to tell, but it doesn't look good. This is not a time to be hodling, okay, in my view. But check with your financial advisor.
Yes, CFP.net. CFP.net. Put your zip code, state, and city, and find a CFP certified financial planner in your area.
Thank you. That's it. That's all I wanted.
All right. Any other comments before the broadcast is ended?
Nope.
All right. Thank you all for joining on Orthodox 50th episode of the Black Brain Trust. Don't forget Sunday on the channel Black Power and Wealth, no Business Power and Wealth. Ulysses and Anti-Gravity were having their weekly Sunday show. What time will that start, Anti?
That'll be either 9 p.m. Central Standard Time or 10. I'm gonna have to check with
Okay.
But I think also Mike has an announcement too for Saturday.
Okay, go ahead, Mike.
It will be the first of installments for our clutch series between myself and Complex Design. So we'll be going over Indy racing, F1 racing, as well as electric vehicles and other kart racing.
About what time?
It's to be determined.
Gotcha.
Where? What channel?
Business, wealth, and power.
Business, wealth, and power. All right. So Saturday, Clutch, the new Clutch series will be going on, or at least the first show. Sunday, the business, wealth, and power talk. Both Saturday and Sunday will direct your attention to the YouTube channel Business with Power. And on Monday, come back here for space and technology.
And Sunday, Business, Wealth, and Power, they're going to talk a lot about marijuana investing and business development. Correct, Anti-Gravity?
Ulysses prefers, we call it cannabis.
Cannabis. Okay.
Which has, no THC, so it's not psychoactive.
Gotcha.
Okay. So with that said, thank you all for joining, and we'll catch you all later.